All right, so there's a handful of things I wanted to talk about from this past week. We did have some news. So getting right into it here, first things first. As far as the market goes, kind of a little bit of an interesting week. We started off very nice, and then, I mean, we did have on Friday was a down day, but on the week, the S&P was still up over 1%. I believe the Nasdaq was up over 2%, so a good week altogether. There's still an uptrend. We actually hit a new all-time high on, it looks like Friday at some point, but again, it did close down. So we hit about 5370 roughly on the S&P, which again was an all-time high. Nasdaq hit a new all-time high. Again, both of those did close a little bit down from those highs, but again, that's not entirely out of the realm of possibility. I guess 5375 was the exact high. So what does that mean going forward? I think it's going to be more of the same. I think we're going to be choppy, but again, like I've said time and time again, I still think we're going to see a pullback in the summer or in the fall. And I think we're going to be right around that 5 to 10% range, probably a little bit deeper than the last time, about, what was that, a month or two ago. And again, that will kind of decide where the market's going to trend from there. If it's deeper than expected, probably we will get, again, a little bit of a downtime. If it's not that bad, then I think we close the year up again. So I think, again, be poised for a pullback, but also keep in mind that where we are at right now, I don't think there's anything that's overly bearish. And again, the next big piece of news coming out of Canada, at least, was, again, I'm Canadian, so again, this was fairly big news here. Bank of Canada cut rates from 500 basis points to 475 basis points, or 4.75%. Now, again, there's kind of mixed messaging when it comes to this. Some people talk about this like it's a great thing. Other people talk about it like it's a bad thing. And the reality is it's probably somewhere in the middle, although I kind of lean towards bad thing, because if you have a strong economy, there's no reason to cut rates. This is something that, again, a lot of people don't seem to understand, that if the economy was strong, we wouldn't be cutting rates. The only reason that you have to be cutting rates is if things aren't as good as they should be. So again, this is not really a good sign for Canada. Now, again, it's only a really bad sign if they're cutting a lot. Like if they're cutting like 50, 100 basis points at a time, that's very concerning. But the fact that they're cutting, in my opinion, is concerning because, and not only that, is that part of the reason why the dollar is so strong right now is because of the major economies in the world, at least the G7 especially. The U.S. is the one that is the least likely to cut in the near future. In fact, I think they're still at about one to two cuts for over the next, or by the end of the year, for the States. And I mean, Canada's pricing in a lot more than that, and most of these European countries are as well. And some of them have also already started cutting. So that's something that, again, as far as Canadians go, yeah, it's better for real estate to have lower rates, but you also have to keep in mind that a lot of the goods and services that we consume are imported, and when you're buying goods and services that are imported, typically they're priced in other currencies when you're buying them, specifically dollars. And when that's the case, okay, well, the weaker our dollar is, well, the more you're going to have to pay, and typically the lower our rates are, at least compared to other countries, the larger that gap's going to be. So it's not as good of a sign, at least in that sense. So as far as the Canadian economy is going, I would definitely be more concerned, at least compared to the American economy. So again, that's just my 2 cents there. I'm not exactly an expert on that. The next big piece of news, again, Bitcoin came very close to hitting a new all-time high. And again, it did pull back a little bit as of late. But again, there's kind of competing interests here. And this is something I also wanted to get into here. Again, so the ETFs are buying record amounts of Bitcoin. I mean, this was on June 5th. Again, ETFs bought 12,500 Bitcoin, while the miners only produced 450. So a lot of people are probably wondering, okay, well, if this is something that's happening, why are we not seeing record high prices? Which, to be fair, we're actually very close. But the reason for that is, again, Bitcoin is being shorted at record levels by hedge funds. Now, again, this is kind of interesting because it's kind of hard, in my opinion, to know exactly what is the hedge fund's play here. And in my opinion, I think it's just a short-term thing because no sane trader, at least from what I have made of the game of trading, shorts or goes extremely long on a very volatile asset, because when you do that, it is very easy to get stopped out or to lose a lot of money, one or the other. So I think that, at least in my opinion, this is just a short-term thing. They are expecting a downturn over the next week or two or three or four, because especially when it comes to Bitcoin, the ability for there to be a very short, upswing, like in a short period of time, like a big upswing or a big downswing, that can easily happen. And if that happens to the upside, these people get stopped out or they lose a lot of money. And the other thing here is, when you look at the Bitcoin blockchain, the whales are still overwhelmingly still buyers. So, and not to mention too, you have the halving, you have exchanges that are having less and less Bitcoin available to them. That is a trend that is going to continue, which means as time goes on, there's going to be less Bitcoin available, which means there's going to be less Bitcoin available to short, which means when you get price upswings, anyone shorting Bitcoin is going to get stopped out or is going to lose a lot of money very quickly. Now, again, it doesn't mean you necessarily are buying call options and going long Bitcoin, because, again, it's very volatile. You can lose a lot of money in either direction, which is why I think that this is a dumb idea. And I think, like I've said time and time again, I think it's just a matter of time until we see another massive upswing in Bitcoin, for a handful of reasons. Number one, the ETFs, people are still piling into those. Number two, you have other things here. You have Semler Scientific announced they're buying more, right? They're buying more. The whales are still buying consistently, at least compared to selling. Retail investors, the same thing. And when you have less and less Bitcoin available, well, what does that mean over the long run? What that means is the price is going to have to go up. So, again, near term, anything can happen, but over the next 6 months to a year, I think we're going to have like a 1 or a 2, 3 month period maybe where we're going to see Bitcoin go up 50%, 100%. And again, when you look at that, this is from Bitcoin Magazine here. A year ago, Bitcoin was at $25,000. Today, $71,000. So again, that is almost a 300%, 200% return. Like, again, going up almost 3x in a matter of a year. That is a crazy, crazy good return. And again, I think that, over the last few months or so, Bitcoin, it hasn't really gone anywhere. And I think you have a lot of people that are too short-sighted or short-sighted here. And people don't realize that, again, you can have these choppy periods are inevitable. And again, to appreciate the double, triple upswings, you also have to be able to withstand these choppy periods. And a lot of people are very, like I say, they're very short-sighted, and they don't want to do that. So, again, my prediction is, don't necessarily take my word for it, I could be wrong, but my prediction is you're going to see a 50, 100%, maybe even more return. It could be July, August, September, it could be September through December, like nobody knows. But I think that is inevitable. Because, again, you slowly are getting the corporate and institutional adoption, which is something that, again, the trend is very clear on that. We haven't broken trend there. And you have the whales that are buying. You have the retail investors that are buying. And what happens if, a roaring kitty or one of these guys decides to give up on the insanity when it comes to GameStop, which is just glorified gambling. And again, not that I'm necessarily 100% against it, but let's be honest, it's just glorified gambling. Bitcoin is not, right? Bitcoin is I don't think it's going to be the future, or it's going to be, everyone's going to have 90% or 50% of their money in it. But I think it's very obvious. It's going to be a normal thing for institutional investors, for retail investors, for hedge funds, for pension funds, you name it, to have 5%, 10%. I think that's going to be a normal thing. And we are still so far away from that, it's not even funny. So anyway, again, that's what I wanted to bring up today. That's the market as far as that goes. But again, as far as the stock market goes too, again, I think we're going to chop around, and I think we're going to go 5-10% in either direction until either the Fed cuts rates or we see something break. And when that happens, I think that's where the market will kind of break out in either direction. So anyway, that's what I wanted to bring up today. If you liked the video, please like, comment, subscribe, all that good stuff, and stay tuned for more.